Welcome back, investors, to Ticker Time News. I'm Adam, and this sums it up. Today makes me feel like I'm in the twilight zone. It's like we are in a bull market all of a sudden, and yep, look at this. Retail, ticker XRT. We talked about it yesterday. There was a lot of retail news coming out this week, in the first half of the week anyways, and it continues tomorrow. But the retail sector was up 2.34% today. It had a great day. And to shed some light on this topic, I want to dive into a specific retail stock that reported earnings. That retail stock that I want to look at is Urban Outfitters. The ticker symbol is URBN. It was up 8.6% today. Big old candle, big old leap higher. It is now way, totally disconnected from its 5-day EMA. So some of this heat that it felt today is going to have to come back down a little bit so it can reconnect. But man, what a massive day. Why? I thought retail was dead. I thought consumers were getting weaker. Well, the data says that retail is struggling and consumers are getting weaker. But Urban Outfitters report today, they reported record holiday sales. Record holiday sales. And that fit perfectly with investors' attitude today. The apparel retailer posted a 2.3% jump in total net sales year over year for the 2 months ending December 31st. Meanwhile, Urban Outfitters retail segment, their comps or comparisons from last year saw a nice 2% plus bump. Now, Urban Outfitters numbers do not exactly jump off the page as like huge, but they do underscore healthy demand. An encouraging sign after Macy's, ticker M for Macy's concerning Q4 guidance and comments, they spooked investors in retail just yesterday. Macy's noted that it believes consumers will continue to be pressured in 2023, and I do too, particularly in the first half, and same with me. But back to Macy's. Based on macroeconomic indicators and its credit card data, this is where Macy's is pulling this kind of negative sentiment about consumers from their macroeconomic indicators plus credit card data. And remember, the credit card data that came out last week said consumers are using more credit card debt than ever. It is consistently going up month after month after month with credit card spending. Savings, they're at a practically zero at this point, and credit card usage is going up. That's what Macy's was warning. That's what credit card data told us last week. So yeah, it fits the bill. Now, back to Urban Outfitters, they encountered similar negative trends as much as the broader market and the broader apparel market is feeling, including rising inventories, which is a big problem for retail right now, and sliding margins. They're getting tighter. In Q3, total inventory for Urban Outfitters climbed 18.6% year over year to $116.5 million. But wholesale inventory soared 39% due to department store sales slowing down. Now, this softness was still present during the holiday season, evidenced by wholesale sales falling 22% year over year. However, this was mostly expected because Urban Outfitters cautioned in Q3 that wholesale sales would continue to experience a year-over-year decline in Q4 and into 2023 as department store partners plan future orders more conservatively, meaning they're ordering less inventory. The elevated inventory forced Urban Outfitters to implement increased markdowns across each of its banners, its brands, causing gross margins to tumble 410 basis points year over year to 30.4%. Now, the good news is that Urban Outfitters was optimistic about its inventory and that its inventory would show further reduction by the end of Q4 as each of its brands work to improve their inventory to sales alignment. Urban Outfitters also projected retail comps or comparisons in the low single digits in Q4. With the company meeting this target for the holiday season, investors are a bit optimistic that it will achieve its targets in Q4. Overall, Urban Outfitters' holiday sales report is an optimistic sign that the apparel industry is demonstrating healthy demand characteristics, a bullish signal heading into fiscal year 24 that can start at any time for many companies. For Urban Outfitters, it starts in January. With supply chain costs starting to fall from peak levels in Q3, margins may begin to recover a little bit, and that would be a good sign, especially as Urban Outfitters works through excessive inventory. Like a lot of retailers right now have excessive inventory. Inflationary pressures on the consumer are also showing signs of easing, possibly providing an additional boost to keep shares of Urban Outfitters trending in the right direction. What do you think about retail this year? Do you think they're going to struggle during the first half and things maybe lighten as we go on? We should also know about the inflation front on Thursday, this Thursday, with the Consumer Price Index. It's coming out. It's going to reveal whether inflation has dropped further or is it staying up there, high. We'll find out. It seems like a lot of market participants are starting to front run the idea that inflation is going down. And if inflation from the CPI report on Thursday does drop, watch out for a huge bull run on Thursday. Okay, let's change direction here a little bit and let's focus on the broader markets. I love talking about individual companies. Absolutely, right here. Yeah, this market is all over the place, isn't it? All right, looking here on the day chart for SPX, for the S&P 500, you can see the pullback yesterday and today's rally. Now, for those that know, this was not unexpected. Why? Yesterday, okay, well, I guess I should say it started on Friday. On Friday at the close, going into the open on Monday, the Monday candle was disconnected from the 5-day EMA. What happened today? We reconnected with the 5-day EMA. This is one of the best tools to not get FOMO'd into chasing a rally. As long as there is contact with that 5-day EMA, we're good. And that represents a healthy move higher or a healthy move lower. But whenever we're disconnected, like we were yesterday, it either means we're going to pull sideways, go down and touch it, and then potentially rally from that point. Let's go into the 15-minute chart here. I'm going to turn the other moving averages off and only have the 5-day up there. And let me open this up so we can see it better. 15-minute chart. We've got today, there's Monday, and then I'll squeeze it in to get Friday on there as well. You can see right above my head over in the corner, we connected with the 5-day EMA right here. Okay. That was Friday at the open. Okay. So the first hour or so, we stayed right around that 5-day EMA and then liftoff. And then a gap up on Monday, followed by the big U-turn on Monday. And then today's choppiness right around that, 3,900 level before this afternoon took over. So the stock market today, this morning, if we're looking at today, it came down like it wanted to reconnect with the 5-day EMA, but it didn't. It didn't go that low. It held up. Price held up. Actually, what was the actual low here? 38.77, 38.78, the two low points. Now, this morning, the trading was mixed at best. Most of the momentum from yesterday's rally completely fizzled out. Done, over with. Major U-turn yesterday. Now, the major indices spent the first half of the day floating around their flat lines due to a lack of, I guess the word I'll use is conviction from either buyers or sellers. I think it was because everyone was nervous about Fed Chair Powell, because Fed Chair Powell gave a speech today titled Central Bank Independence at 9 o'clock a.m. Eastern. But his comments had limited, if any, real impact on the markets today, because he kind of stayed away from that. Instead, the fickle start to the trading day was likely driven by hesitation ahead of the December Consumer Price Index on Thursday, followed by big bank earnings on Friday, which marks the official start to the Q4 earnings season. Now, shortly after the open, decliners did outpace advancers by a very slim margin at the New York Stock Exchange, but advancers did lead decliners at the NASDAQ. Buyers exhibited more commitment starting around midday, and we can see that on the chart here, with the break of structure taking place right around 12:30 p.m. Eastern. By the closing bell, advancers led decliners by a roughly 5-2 margin at both the New York Stock Exchange and the NASDAQ. The main indices closed near their best levels of the day, which left the S&P 500 comfortably above its 50-day moving average right around 39.07. That's important. Remember, bullish above, bearish below when talking about the 50-period moving average. Now, the late push higher was fueled by a broad-based buying interest from market participants. If we look at the Invesco S&P 500 equal weight ETF, ticker is RSP, that closed at its best level of the day, up 0.8% versus a 0.7% gain in the S&P 500. 10 of the 11 S&P 500 sectors closed in the green, led by communication services, XLC, up 1.3%, and consumer discretionary, XLY, up 1.3%. While consumer staples, XLP, was down 0.2% and was alone in negative territory to close out the session. Notably, though, small caps performed better than their larger peers. Looking at the Dow, it was up 0.6%. But the IWM, which is your Russell 2000, was up 1.5%. So small caps really came out today, like the new bull market just started. Oh my goodness, it is something. All right, so before I get into your questions, I just want to say here real quick that the S&P 500 right now is in a bullish context, okay? On the short term, we are still facing some overhead issues right here about 39.50, okay? That would be about 395 to 400 on the SPY. We're facing some issues there with resistance. And we are currently just above, just below a resistance area, which looks to start real close to about that 39.20. So we're about 1 point below. If you look right over here on Tuesday, that's the gap up point and then the support on the way back down. That's about where we are right now. Again, 1 point below that. that'll be a significant place to pop ahead of if this rally is going to continue. Plus, we've got an inclining 5-period moving average. That's also showing us some bullish context in the short term. All right, let me clean up this chart here real quick. Boom, 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 boom. And it's done. Let me go back to the daily here real quick. Adjust the chart, adjust it real quick, coming back down. Remember, the upper end of the weekly expected move is 39.93 for this week. So by the close of Friday, we could be that high, which would also put us in test with the declining trend line that stopped every major rally in 2022. Will it hold in 23? That is to be seen. Now, again, like I said earlier, I think market participants are starting to front run the idea of softer inflation numbers on Thursday. All right, let's keep rolling. Let's hop in here. BABA was a big one today, and I think BABA's still got room to go. Let's see here. First one up, Meta, 1 hour, flipped bullish at the close. All right, META. We'll go through your questions that you have, plug them into the chat. I'll just go right down the list. And once we get through that, then I'll talk about tomorrow. And I'll also go through the SPY, Q, and IWM for things to look out. Yeah, Meta broke out, right? We can see that clearly here. Let me adjust the trend lines. We're back on the daily chart now. Meta broke out real nice. It's above that 50-day moving average. And remember, bullish above, bearish below on the 50-period moving average. So that looks really healthy. It's connected with its 5-day EMA today, which was perfect because remember yesterday, there was a disconnect. It disconnected from that 5-period moving average. It is now connected with it. It came down lower this morning and then popped back up this afternoon. Nice 2.7% gain. And the weekly expected move for Meta Platforms is 136 on the top side, that's where I think it's headed. And 123 on the bottom side. I don't think Meta's going there. I think stocks are going to move higher because market participants are front running the Fed potentially. I'm sorry, not the Fed. CPI potentially coming in lower than expected. Inflation coming down more than expected. But also something else here at that upper end of the weekly expected move, 136. We've got a lot of overhead. If we look here to the left, we've got a lot of overhead resistance that Meta has had to deal with in the past. When it was coming down in price, it found support there. But then when it tried to bounce, no, it was done, rejected, and fell hard. So we do have that to contend with as we start moving up to the upper end of the weekly expected move at around that $136 a share level. That could be very stiff resistance on the 15-minute chart. Let's roll in there real quick. Let me just flip on the 5-period. Let's open this up so you can see this. All right. Deep fall this morning, but it climbed, bull stepped in. There is a nice solid move with its 5-period moving average. Real nice, big move there. And this is strong for Meta. This is real strong. Let's see. It topped out here at about 133 this evening, or almost that close, about 45 minutes before the close, and then kind of just hung there. It is looking pretty nice. I have to admit, it is looking decent. All right, let me just take care of those two lines. Let's go back to the daily. But again, I do think Meta can head towards the upper end of its weekly expected move, and then it'll catch resistance right there. All right, let's see here. When Powell speak, it always ruined my trades. Yeah, Powell today, he didn't really reveal much of anything, right? His conversation, his speak today over in Sweden, it really had no effect on today's market. Really, it didn't. It was all this afternoon that investors started to think, well, wait a minute, hold up. Maybe inflation's coming down, because you were getting these retail reports in from the conference and from earnings like Urban Outfitters saying that, yeah, the consumer is spending more on credit cards, like Macy's said, but Urban Outfitters had record holiday sales. That gets traders and investors sometimes hopium, being overly optimistic. Because remember, being a successful trader, you have to be a realist, right? You buy from the pessimist and you sell to the optimist. That's what the realist does when trading. And yeah, Powell can mess with the market, but I don't think he did today. CCL looks good. Let's plug that in. And I'm going to pull up Baba too, because Alibaba, it's looking pretty strong. It did pretty good, especially today. Okay, Carnival, nice run that it's been on. It is disconnected from its 5-period moving average, meaning I think this rally could stall. I do. I think this rally could stall. It might have a little more umph in it, maybe to get to, maybe the 995 area. But being disconnected from that 5-day EMA, it looks like today is either day 2 or day 3 of being disconnected. And that 5-period moving average, it's like a circuit, okay? With, say there's a light switch in there, right? When the switch is on, electricity can flow perfectly fine. Lights turn on, you're all good. When you flip the switch and the lights go out, that electricity can't flow. You're in the dark. When candlesticks are disconnected from that 5-period moving average, that electricity can't flow through. 2 or 3 days is usually tops for the amount of days that it can be disconnected on a normal cycle. Now, sometimes there are abnormal cycles where, look at Carnival back here in the middle of November, when it just completely went haywire and went on this magnificent big boost right here, right in the middle of the screen. You see those candles just popping off? This is an example of something going haywire within the electricity, and it's just jumping like crazy. Because here it was disconnected 1, 2, 3, 4, 5 days. On the 6th day, it reconnected. That's abnormal. That's not how it normally will function. So keep an eye on that. Again, it's been disconnected for 2, possibly 3 days. It's really, really close there on Friday, whether it actually connected or not. So that's the only thing that I would be cautious of. It did flip on Friday to being above that 50-period moving average. So definitely keep an eye on this. Now, again, that 9.95 area, also watch out, because if you look here, look at the volume shelf profile, it just completely dies out once you're above that point. So you do have to be careful about that 9.95 level as resistance, and could potentially just stop them in their tracks. But they've been on a nice run. When did this start? December 29th, and just really took off. So that's a good one. That looks good, but it looks like it's getting to the top there. 4-hour Dixie DXY, the dollar, the greenback. The market really fluctuates depending on what the dollar is doing. All right, let me pull this in. I'm on the daily here right quick, just to show you real quick what happened today. We basically get looks like possibly a doji, maybe a spinning top candle for today. Just holding still, kind of like the market did this morning, where not much was moving. Everything was kind of hanging around that flat line. That's what it looks like for the dollar today. Now, in the after hours, the dollar's barely moved. I mean, what is this? 0.08%. So it's basically flat in after hours. I want to see if it can get back into its trading range that it has been in for a couple weeks now. One thing I want to point out is the 5-period moving average. You know, I got to mention it. Today's day one of being disconnected, and that 5-period moving average is declining. So it is under a declining 5-period moving average. It's disconnected from it. That should give you a bearish or negative bias, at least on the dollar in the short term. Can it pop up from here? I think so. It's going to get some steam somewhere, I think. But this sideways trading is just crazy. All right, you wanted me to look at the 4-hour. Okay, let's throw the 4-hour on here. Yeah, look at that. On when we go deeper into it, looking at how it acted on the day, you have a little bit of support. What is this number? Okay, 102.95. 102.95. That's where there was a little bit of support there, and then it started to slowly increase and then flatten off into the close. Not too bad. It's holding up, right? Today, you know, it hardly moved. Seeing that is a positive sign, you know, which is negative for equities. Like, I'm surprised the dollar barely budged today, but we've got the SPY up 0.7%. You would expect to see the dollar cool off a bit. So is the inverse correlation between the dollar and equities, is that starting to give a little? Because at some point, that'll happen. I don't know at which point, but at some point, this inverse correlation that the dollar has to the S&P 500, it'll start to disappear. We've had some fluctuations recently, but for the most part, a strong dollar means weak equities. Okay, here's Baba. Baba did good today. Let's get over here and pull it up. BABA, Alibaba. The stock did tremendous today. It really did. We were talking about this level right here, and we put the Fibonacci on, and it's retraced and gone high. I mean, it's gone. It's out of here. All right, let's take the fib off because that's now invalid. Real strong move. These Chinese stocks sometimes can just go on a march. And this next area, you know, the high that was met back here, what was the high here? 125.84 on July the 8th. Is that where Alibaba is headed? Up into that cloud up there of red? That storm that's waiting for it? Well, first thing, you know, I got to say it, the 5-period moving average, it is disconnected and it's running hot right now. But I mean, it was a nice 3.65% move to the upside today. Above that 50-period moving average. It's been there for a while now, going back, almost over a month. Over a month, it's been above that 50 period. So that's decent. That's good. All right, let me dive in here. Go to the 15-minute time frame, and we'll take a look at this. Let's open this up. Wrong way. All right, got to pull it down. And I've got to adjust a couple of these moving averages here. Boom. And take that one away and bring this one back. All right. Let's pull it down. Look at that. Real nice move today. And it's looking like 115. What was today's absolute? 115.48. If you could get, if this rally is really going to continue, you want to get it on a quick pullback to like 114.12. If you're going to play this intraday, this right here, this 114.12 seems like an interesting place to catch a bid. If it's going to pull back and continue to hold that as support and then bounce to run higher from it, or is it stretched itself too far that it's got to hit the brakes to catch back up? That's the big question. If we look at the move from right about where we are up to, it's a 9% move, getting to that overhead resistance, another 9%, and it's there-ish. But man, it's been breaking nice. If it does break that 114.12, watch it when it comes down to this 110.90, 110.90 level. That would be another interesting level to potentially catch a bounce from if it's going to continue like this and remain strong. If we look, I think there was another government agreement today for BABA that caused it to just keep on rocking. I don't see it written here in the headlines on TradingView. But those two areas I'd watch real closely to see if they can hold 114.12 and then 110.90. Those are the two spots. And then notice how disconnected it is from its 5-day moving average. 2 to 3 days is like the typical length. This thing is going on now for a while, being disconnected from that 5-period moving average. So watch those levels. And right now it's going strong. That relative strength is up there. And it's been holding for, let's see, 3 days in a row. That relative strength has been holding well. It kind of dipped down here 4 days ago, but then that 5th trading session last Wednesday was also up there, and that's where we had that big gap up. If we're going to fall and pull back from here, we're going to break those two levels. Then you can go in short mode and catch it on the way down to its 5-period moving average, which currently sits at about 101.5. So that'd be my take there for Alibaba. All right. Amazon. Let me go back to the daily here before we switch over. Amazon has been a short candidate. As a matter of fact, I need to look back at my short candidates and see how they've done. All right, Amazon here. 2.87% jump today, and it looks like it's really, really close to its weekly expected move. Did it tag it? Nope, not yet. So the upper end of its weekly expected move is $90. The lower end is 81. It looks like it wants to go up and tag its upper end at 90, specifically 90.54. That's the upper end of the weekly expected move for Amazon. It looks like it wants to tag it, but, you know, Amazon is in this overall downtrending structure here where it just barely broke through today. Can it actually hold that and push up to that weekly expected move? Or, it could push up to it and then find a bunch of sellers pushing it way back down. Let me put that 5-period moving average on, and you can see the 5-day moving average is the blue line that's intertwined with these candles. Today was day 2 of being disconnected from that 5-day EMA. And, that's a big 2.8% move, 2.9% move above that 5-period moving average. Today being day 2, tomorrow we could get a pullback to reconnect with that tomorrow. But this trend line, we've got to be careful with that. It could push up and tag that weekly expected move. I mean, it's $1 away. It's $1, and then it's tagged it, and it can tag it and then pull back down. So just watch it here. Earnings 20 days away, not affecting it. Relative strength, it's about a 52.7, so it's pretty strong. Let's see anything relevant here. Shopify faces significant threat in Amazon buy with Prime. Amazon faces renewed pressure from UK lawmakers over warehouse conditions. All right, so not much there. I saw some news about Bed Bath & Beyond. When they talked about their earnings, they didn't mention the word bankruptcy. That's another stock that's like completely disconnected from the world here. Tesla is not ready to go yet. All right, let's look at Tesla. TSLA for the ticker there for Tesla. Nope, look at that. With the strength in the overall market this afternoon, that could have moved Tesla. But you also have to consider here that Tesla was disconnected from that 5-period moving average, reconnected with it today. It sunk down below it, but there were some buyers there. And a lot of times when a stock has reached its weekly expected move, we've seen this hundreds of times, that when a stock tags its weekly expected move, whether on the upside or the downside, it'll just move sideways from there. We've seen that a lot. So Tesla tagged it yesterday, tagged it again today, and it's just moving sideways. It's not really ready to break this. What would this be? About a 122, 123, right around where the weekly expected move is, because you've got here, and then again the past 2 days. So it's really a cloud overhanging there. If Tesla could ever break from this 122, 123, then it would have a decent chance of moving back up into the yellow box up here. But until it's got enough momentum and strength to do so, it's just going to sit there. And if you look, momentum has really been, really been kicking in for Tesla as it's just melted down. But it's good, even though there's overhead resistance for Tesla around that 122, 23. It's good to see it moving sideways after all of that loss. That's what you want to see. When you have a company or a stock that's, really sold off, you want to see it to build out a base and just move sideways. That's what you want to see. And maybe Tesla is starting to do that. Maybe Tesla is starting to move sideways. Now, I did see some pretty big news. Tesla's going to spend over $700 million to expand its Gigafactory Austin. I don't remember what the expansion was for. I just saw that they were going to spend that money to expand that Gigafactory. I'm curious for what they're going to use that expansion for. Is it for, you know, production, for batteries? You know, what is it for? I didn't read into the article too deeply. Just really the kind of title and byline there. All right, let's keep going here. Yeah, Tesla, it looks like it's basing out, which means it's probably not going to go anywhere, which isn't necessarily a bad thing. Let's see here. Text green, game over. Hand purple, blue, peace. Oh, realist is the name. That's cool. That's cool. That's cool. Absolutely. BBIG might be ready to turn around soon. Let's plug in BBIG. Be big. I didn't even type in the right letters. My goodness. BBIG. Vinco Ventures, BBIG. Be big. I like that. Be big. All right. You know, kind of like Tesla here. Let's open this thing up and get a little closer. All right. So first things first, the bottom hit here, December 29th, if we kind of run this up, we need to move that up. Let's take it up a little higher. We got to touch those candles. That is definitely a solid ascending trend line right there. That's solid. And then if we go, okay, so where's overhead resistance coming from? I mean, it looks like it's broken out from it. And if we go back to where there was support right here, and let's just do that. It looks like we had a bit of a breakout here from that resistance, which is a good sign. It is disconnected from that 5-period moving average today. Yesterday was almost like a hammer candle, but not quite. So if we're looking here, this thing has, it looks like a little bit of potential, maybe, but it's not a whole lot. It looks like that next overhead area for it, it's not far away. I mean, it looks really like it's going to be about right here. And that's not too far away. That line is at 56.78, and it's at 53.7. So, you know, basically from 53 to 56 would be the next area that I'd be concerned with. And if it could get a break from that, that would be positive. And then we'd have to, you know, start looking at 63 up to maybe around 67 as like a zone for next resistance. So if it could break this 56.7, then, you know, going up and tagging 63, I think would be possible. Okay. Which is, and let me just put this on here. So if we ever come back and look at this, we can see whether we were right about this or not. Oh, come on, trend line. On trend line. Oh, my trend line not working. That is so weird. Okay. Oh, well. So anyways, getting back to the point, 56, if it could break that, then I think it could run up to 63.